Hi everyone, in the previous update we were looking for a quick move out of this range and then we got this nice impulse to the downside, and as explained, with an impulse you want to wait for your wave 4s and your wave 5s, a bit of a grinding and ranging structure, and that is what happened here on the lower time frames while moving into support, the daily naked point of control. Now this was a main area of interest for opportunities as explained in the previous update, and now that price moved towards the upside from our area of interest, it is time to have a look at the Elliott Wave scenarios once again. In general though, the probabilities have not changed. The probabilities are higher that this range over here is a corrective structure, not a motive wave structure, which increases the probabilities to sooner or later take out the all-time high. Now let's then start with the bullish scenario, which I have here on my chart, a finished three-wave corrective structure, and you're looking for price to continue towards the upside. The invalidation, naturally, is going to be the low here at 114.7k. In this scenario, we're looking to finish this wave 1, might be finished at the high, maybe another 4 or 5 to hit some resistance higher. Doesn't really matter because after wave 1, nonetheless, you're looking for a three-wave corrective retracement to the downside. That is going to be your wave 2. And that is important. We want to see a three-wave structure like a zigzag or a flat or a sideways WXY, but we need to give price a little bit of time to show us what type of structure it prints. We also preferably like to see this wave 2 and after this vertical line on the chart, which is the 0.382 FIB time, sitting on the 29th of July at 6 a.m. So naturally, we got to be a little bit patient with this bullish scenario. In the bearish scenario, we are looking for a continuation of the range. This structure is now only a wave A or a wave W. We're looking for a B or X and then another C or Y to the downside. So you create a bigger, larger sideways structure and you move up at a later stage. Preferably, however, your wave B or X is going to end after this line here on the chart, the 302 FIB time sitting on the 29th of July, 2 p.m. Central European time. Now mind you that wave B or wave X can be any corrective structure. It can be a zigzag, can be a flat, can be a triangle, whatever. Again, we just wait for price to show us what it wants to do. We need to give it a little bit of time. We knew, or at least we were looking for price to move towards the upside from our area of interest. Now that we have it, we want to give price a little bit of time. But as you can see in these cases, we are at least looking for a retracement in a wave 2 or a retracement which preferably is going to be part of a bigger wave B or X. Now finally, I like to shortly cover the most bearish scenarios, which would be motive wave structures like an impulse, wave 1, wave 2, and then eventually 3, 4, 5 for much lower prices. The reason this scenario has very low probabilities is because your wave 2 is 10 times the size of your wave 1. So this is a FIB time taken from the start to the end of the move down, comparing this as your wave 1 with the range that is your wave 2. And your wave 2 is about 10 times the size of your wave 1, which is incredibly rare. That's not what you like to see for a wave 2, and also actually not really what you want to see for a wave B or a wave X if you like to count A, B, C, or WX and then a wave Y. Now then with a diagonal, you would count this as a wave 1, a wave 2, a wave 3, wave 4, and then a wave 5. And in this particular scenario, your wave 3 is about 6 times the size of your wave 1. As you can see, this is the 6 FIB time, this dark red line here on my chart, comparing wave 1 with wave 3. And the fact wave 3 is so long compared to wave 1 is definitely not nice. So, it does affect the probabilities. It is, however, not theoretically invalidated, right? If we take a channel from the end of 1 to the end of 3 to the end of wave 2, then price did not touch the upper trend line, which would be an invalidation for a contracting diagonal. And if you take a FIB extension from the start to the end of 2 to the end of 3, put on the 1-to-1, drag it to the right, price did not touch this as well. So again, it is not invalidated, but wave 3 being so long compared to 1 is a little bit meh, right? Nonetheless, though, even in a diagonal, if you would get a 1, 2, 3, 4 and a wave 5, and then eventually you would still expect a move back towards the upside because the diagonal is going to be wave 1 or wave A, and the move to the upside is going to be your wave 2 or your wave B. So we have more than enough time, right? You would expect this range to continue even if you take the low, and then you have more than enough time to potentially recount if there is a diagonal. It just doesn't have the highest probabilities at the moment compared to corrective structures. With regards to support and resistance, these are the levels that I have on my chart here in this range. To the upside, we have some resistance, as you can see. And to the downside, a lot of horizontal levels, so there's definitely some support here. But as explained in the different scenarios, preferably got to be a little bit patient to see what forms. Below this range, we have the 2-hour order block here, sitting between 113 and 113.9K. Then we also have some news this week, Tuesday, Wednesday, Thursday, and Friday. All the times you see here are Central European time zone, so just make sure that you trade safe at these times because it can increase the volatility on the chart. And then we get to the probabilities. So in general, the probabilities are higher for the bulls. The range is higher probability corrective, which increases the probabilities to sooner or later take the all-time high. However, in the different scenarios, as you have seen, we're looking for a retracement. In the bullish scenario, we're looking for a wave 2. Gotta give it a little bit of time. You want to see a nice 3-wave structure, right? And then preferably ending after at least the 0.382, which is not where we are at the moment. And in the bearish scenario, you're quite simply looking for larger corrective structures and then B or X, and then later move down again in a wave C or a wave Y. And even in a B or an X, you're looking for a larger corrective structure, right? But we, again, got to give it a little bit of time to then see what forms. So that being said, I hope that this video was helpful or valuable to you. On the left, you see a video on the simplest way to use and trade Elliott Waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.